What is going on, my friends? It's great to see you guys and be back here for another video. My name is Ryan Williams, and if you've been following my channel for a while, you'll have heard me say at some point that I really don't care about how much my stocks appreciate in value. While many investors get their kicks buying stocks that just skyrocket in value, which is pretty cool, I'm not gonna lie, I more so invest with the intent of increasing my dividend income and generating passive cash flow. In fact, for my purposes, it's actually better if my stocks decrease in value and become less expensive so I can buy more dividend income at a cheaper price. However, I do realize the importance of buying into stocks that go up in value over time, especially if we're talking in terms of 5, 10, 15, 20 plus years, as that is a sign of a growing and expanding company. You really don't want them to be the same price 20 years from now that you bought them for today, which brings me to the topic of today's video. In this one, I am going to be revealing the top 5 best performing dividend stocks in my portfolio. We'll run through each one and I'll be sure to show you guys just how much I've gained from investing in these 5 companies. Anyway, before we get rocking and rolling, don't forget to give this video a big thumbs up if you're enjoying this content as we're going through it. And also leave me a comment below. Let me know what are some of the best performing stocks in your portfolio. I would love to hear about it. Anyway, thank you guys so much for doing that. And now, without further ado, let's get into it. All right, guys, now as we're going through each of these 5 stocks, I'll give some quick tidbits and talk about them a little bit, and then I'll share with you just how much I've gained in each one. And the very first one I want to start with today is the 5th best performing stock in my portfolio, and that is WP Carey, ticker symbol WPC. Now, for those of you who are not too familiar with this company, WP Carey is a real estate investment trust, or a REIT, and the buildings that they own and lease out are used for like warehouse storage or industrial use or like self-storage spaces or even retail or office use. So it's pretty diversified in that regard. And they're also pretty diversified as far as location goes. They have a lot of tenants here in the United States, and they also have some in Europe. And as far as their top 10 tenants goes, guys, I'm sure some of these are companies that you've heard of, especially if you're living here in the United States, with their very first one, as you can see on the screen, being U-Haul, which makes up 3.2% of their total rent revenue. Extra Space Storage, which is a self-storage company, which makes up 1.7%, and then Advanced Auto Parts and Marriott International. These are just the ones that are based here in the United States. I mean, Marriott is international, but then the others like State of Andalusia, Hellwig, Metro Cash and Carry, those are some of their European tenants, and I'm really not too familiar with those, to be honest with you. But the main point here is WP Carey is very diversified in the tenants that they have and the locations that they operate in. And moving on, guys, let's talk about some of WP Carey's dividend stats real quick before I share with you my position in this company. So as you can see on the screen here, they have a forward dividend yield of 5.38%, which is extremely high. Okay, I'm very happy with that dividend yield. That's a great yield. And then they have a payout ratio that's also very high of 93.38%. Real estate investment trusts have to pay out, I believe, 90% of their earnings to shareholders in the form of dividends. So it's natural that we're seeing this payout ratio so high. But if it were any other company like Coca-Cola or like a 3M or Pepsi, this would be a concerning payout ratio that we may want to steer away from. Okay, now moving on, a 5-year growth rate of 1.57%, which is actually not the highest. Okay, I'd love to see that be a little bit higher, but their dividend yield is already currently pretty high, so we'll give them a pass on that one. And then WP Carey has a very unimpressive dividend growth history of 1 consecutive year. But if we move on to this next slide, we can see that despite this 1 year of consecutive dividend growth, they have actually 23 years of consecutive dividend payments. So hopefully as time goes on, we'll see the years of growth increase with this company. All right, now moving on, as far as my current position in this company goes, I have 16.445 shares of WP Carey at an average cost per share of $69.22. Now, as I mentioned, this is the 5th best performing stock in my portfolio, and I'm currently up about 12.5% in my position, which is really not too shabby, especially considering this next screenshot here. If you look towards the bottom of that, you can see that I bought my first tranche in this company back in February of this year. So it was just about, just about 6 months ago. So I've only owned this company for about half a year, and it's already up 12.5%, which is a lot of gain in not a lot of time. All right, guys, now moving on to the second stock we're talking about today, which happens to be the 4th best performing stock in my portfolio, and that is Altria Group, ticker symbol MO. Now, if you're a dividend investor, you will have most definitely heard of Altria Group, but in case you have not, Altria Group is what is known as a sin stock, and what I mean by that is they essentially manufacture products that maybe are not the best for human consumption, and this can include things like tobacco products like cigarettes, chewing tobacco, e-cigarettes, stuff like that, and they also have their hands in wine, beer, and now even cannabis, which we'll get into. So as you can see on the screen, they have a handful of different companies that they operate under, including Philip Morris, U.S. Smokeless Tobacco Co., John Middleton, St. Michel, and then there's another Philip Morris Capital Corporation. And just to break down each one a little bit here, so Philip Morris is known for owning and manufacturing products for Marlboro, Chesterfield, and Virginia Slims, which I'm not a smoker, but I do actually know that those are some of the biggest names in cigarettes. U.S. Smokeless Tobacco Company specializes in smokeless tobacco products like chewing tobacco, and the two biggest brands that they manufacture are Copenhagen and Skoal. Moving on, John Middleton, which is a company that has actually been around since 1856, so a long time. They specialize in pipe tobacco and cigars, and their most famous brand or their most popular brand is Black and Mild. St. Michel Wine Estates, I think that's how you pronounce it, but they make and manufacture wine and own different wine companies. And actually, St. Michel ranks among the top 10 premium wine producers in the United States. So they're actually a relatively big deal in the wine industry, at least here in the United States. And then moving on under strategic investments, Altria Group has a 10% stake in this AB InBev, which is Anheuser-Busch, which is one of the biggest beer, alcoholic beverage manufacturing companies in the world. And Altria Group, as I just said, has a 10% investment into them. Juul, which is the next strategic investment for Altria Group. I'm sure you guys are familiar with this company, Juul. They make vaping products, which I'm really not too familiar with. This is not exactly my my wheelhouse, but I have heard of the company at least, and I know it's a pretty big one in the industry. And then last but not least, Kronos Group, which is a more recent investment for Altria Group, and actually their introduction to the cannabis industry. So Altria Group now has a 45% stake in Kronos Group, which I believe is a company that is based out of like Vancouver or Toronto, nonetheless somewhere in Canada. Now, as I mentioned a moment ago, guys, Altria Group is what is referred to as a sin stock, and so we shouldn't be smoking cigarettes, we shouldn't be chewing tobacco. A little bit of wine or beer here and there is pretty good, but it's not something that we should make a serious habit of. So overall, they're really not the most positive products, we'll say. And that is actually cause for a lot of investors to shy away from investing in this company because they don't want to support those type of products and they don't want to encourage that, which is understandable. And Altria Group actually realizes this, which is why they're really making an effort to steer away from some of these harmful products and really reduce the negative impact that they have on people. And as you guys can see on the screen here, Altria Group is really making an attempt to change their approach and reduce the harmful impact of their products. And this screenshot here reads, successfully transitioning a significant portion of adult smokers to smoke-free products represents a substantial opportunity for our adult tobacco consumers, our business, society, and our shareholders. That's why by 2030, Altria's vision is to responsibly lead the transition of adult smokers to a smoke-free future. And looking at this next screenshot, these are a few of the different ways that Altria Group intends to accomplish this by pushing people more towards oral tobacco or maybe nicotine pouches, which are probably a little bit less bad for you than the chewing tobacco, e-vapor products like what you can find with Juul, and then heated tobacco products, which I'm really not exactly too sure what these are, but I would imagine it's pretty similar to e-vapor. So long story short, those are just a few of the different ways that Altria Group is trying to transition from just regular cigarettes and probably chewing tobacco into these other types of products that will help continue to grow and expand their business and hopefully make less of a negative impact. And switching gears for a moment, let's talk about their dividend yield. So one of the things that makes Altria Group a hard stock to not invest in is their dividend stats. So as you guys can see on the screen now, Altria Group has a forward dividend yield of 7.14%, which is, gosh, even higher than WP Carey's. I mean, you thought 5% was pretty high. 7.14% is very impressive. A payout ratio that's actually considerably high, almost 75%, which is probably about 15% higher than what I'm comfortable with. but they do have the dividend growth to back it up. 17 years of consecutive dividend growth, and I totally skipped over the 5-year growth rate. I'm sorry about that, which is also pretty impressive, 8.77%, which in my opinion is not too high. That, you know, we see some stocks out there that have a 5-year growth rate of like 18, 20%, which may not be the most sustainable. And this one's also not too low, like we saw with WP Carry, 1 point something percent, 2%, whatever. So this one, you know, I'm pretty content with this 5-year growth rate. And if we go to the next screenshot here, as I mentioned, they have 17 years of consecutive dividend growth, but they have 51 years of consecutive dividend payments. All right, now moving on, as far as my position with Altria Group goes, I currently have 36.346 shares of this company at an average cost per share of $41.48. And my position here is up, once again, a pretty substantial amount, almost 16%. And moving on to this next screenshot here, guys, I really have not held this stock for too long. It looks like I bought my first tranche on January 14th, 21. So just in about 7 months or so, I've gained almost 16% with this stock, which is something I am totally fine with and has actually exceeded expectations. All right, my friends, stock number 3, the third best performing stock in my portfolio, is one of my favorites. You guys heard me talk about this one actually fairly recently, and that is Realty Income, ticker symbol O. Now, like WP Carry, Realty Income is another real estate investment trust. Realty Income is actually known as the monthly dividend company, so they take their dividends very seriously. And as far as some of the top tenants for this company goes, a lot of them are names that you'll recognize, including 7-Eleven, Walgreens, Dollar General, FedEx, Dollar Tree, LA Fitness, AMC and Regal Cinemas, Walmart and Sam's Club, Lifetime Fitness, BJ's Wholesale Clubs, Circle K, CVS Pharmacy, Home Depot, and Kroger. I'm sorry to list all of those out, guys, but if you live here in the United States, all of these are companies that you will have probably heard of at some point. I'd be surprised if you hadn't heard of any of the companies I just listed off. And I won't go too much more into Realty Income, guys, because I just covered it pretty substantially in one of my recent videos on the best monthly dividend paying stocks. If you guys want to check out that video and learn more about Realty Income, you can find the link to it in the description of this video. But let's move on here. I want to talk about my position in this company. So at this current time, I have 35.702 shares of Realty Income at an average cost per share of $59.03. Now, my position in Realty Income is up quite a bit more than the last 2 stocks. So I'm up almost 20% with Realty Income, 19.46% to be exact. And as we jump over to this next screenshot, guys, it'll show some of my purchase history with Realty Income. And just because all of these are like pretty minimal fractional shares, a lot of these are just dividend reinvestments. In fact, this screenshot really does not tell the full story with Realty Income as far as it being in my portfolio goes. So you guys may or may not know this at this point. I've talked about it on my channel before, but prior to investing in Charles Schwab, which is where all these screenshots are coming from, that's the brokerage that I'm currently using, I had an account with Robinhood, and that's where I started buying into Charles Schwab. So that data probably didn't transfer over from Robinhood, and realistically, guys, I've probably owned this company since I'd say somewhere towards the beginning of 2020, maybe in February or March of 2020. So I've had my Realty Income shares for about a year and a half now, I would guess. So 20% or 19.5% in a year and a half. Okay, that's not as quick of a gain as with the last 2 companies, but I'm not gonna scoff at it one bit. I'm still up quite a bit, so I'm pretty happy. All right, now moving on, stock number 4, or the second best performing stock in my portfolio, is a company that I guarantee you'll have heard of. It's a great dividend paying company, and that is 3M, ticker symbol MMM. Now, if you're a dividend investor, you will have most definitely heard of 3M. In fact, chances are you probably have it in your portfolio. One of the reasons that I really like investing in 3M is because they are very diversified in the products that they make and the industries that they operate in. So 3M makes different adhesives or parts that are used for construction or even health and consumer products, and they operate in different industries like automotive, consumer, design and construction, electronics, energy, government, healthcare, manufacturing, safety, and transportation. And if we look at this next screenshot, some of 3M's featured brands include names like Post-it, which makes the sticky notes that we've all used. No one has not used a sticky note. Okay, Scotch-Brite, which I believe is some sort of cleaning solution. Scotch tape. I actually just used a lot of Scotch tape on my recent move. Command strips, I use a lot of those. Really great for hanging up pictures or hanging up hooks, stuff on the wall if you don't want to, bang a nail into the wall. And then Ace brand bandages, which is something you'll have used if you were doing some box jumps and slipped and gashed your shin open, which is something I did last year. I won't go into it, but ace bandages really come in handy. Another one of the reasons I really enjoy investing in 3M is because of their dividend stats. So the yield is not super duper high, 2.94% forward dividend yield. Okay, a payout ratio that's actually right in the sweet spot, almost 59%. And if you guys know me, the range I'm kind of looking for is 40 to 60%. At the very least, definitely under 60% is kind of the highest I'm comfortable with. Although Altria Group most definitely is an exception to that. Moving on, the 5-year growth rate is actually not too shabby, 6.68%. Okay, that's pretty respectable. And then a dividend growth history of 62 consecutive years, making 3M the first dividend king of the day. It has a really, really long dividend growth history, guys. And then as far as my position in 3M goes, I currently have 10.154 shares of this company at an average cost per share of $168 even. And it's actually pretty wild how much this company has grown for me. So each share I own is up an average of $32.85 from when I bought it, which is, in my opinion, pretty dang high. Making my total gain at this time 19.55%, almost 20%. And I really have not owned this company for too long either, guys. It looks like I bought my first tranche on September 30th of 2020. So I've owned this company for maybe about 11 months now. So a 20% gain in less than a year. I'm pretty content with that. All right, guys, the last stock of the day, the big reveal, the best performing stock in my portfolio at this point in time, probably my favorite dividend company to invest in, and that is Starbucks, ticker symbol SBUX. Now, I will not go too much into Starbucks because you guys already know Starbucks. Chances are you're a frequent customer of Starbucks, if you're like me at least. So I won't go too much into what this company does or some of that stuff behind them. Let's just jump right into Starbucks' dividend stats. So as you guys can see on the screen, Starbucks has a forward dividend yield of 1.55%, a payout ratio right in the sweet spot, 55.59%, a very impressive 5-year dividend growth rate of 17.61%, which hopefully that's going to be sustainable. We'll see as time goes on. And then Starbucks has a dividend growth history that's really not too bad, 11 years of consecutive dividend growth. And then moving on, guys, I currently have 15.259 shares of Starbucks at an average cost per share of $96.05. Now, Starbucks is looking pretty pricey right now, up over $110. I guess if you add those two numbers together, $96.05 plus $19.85, that's got to be, what is that, like $115.90 or something like that? And then this is the only company in my portfolio that is up over 20%. I am up 20.66% to be exact with Starbucks. This is also probably the stock that I've held for the longest. It looks like I bought my first tranche on February 25th, 2020. So I've had this company for maybe about a year and a half or so now. So I've had it for quite a bit of time. And as I mentioned, this is probably my favorite company to own. I'm a big Starbucks guy. You guys know that I always have my coffee cup when I'm recording these videos, and there's always Starbucks beans in this cup, okay? I always buy them for home. And I probably go a couple times a week to Starbucks. I know that might not be the best thing, but it's something that I love doing. I love the atmosphere of Starbucks. I love the experience. I love their products. I even love the smell when you walk into the store. That might even be one of my favorite parts about going to Starbucks. So, no, I mean, who am I kidding? My favorite part about going to Starbucks is definitely the pumpkin loaves. Those are second to none. But anyway, guys, those are the 5 best performing stocks in my portfolio. And with that said, that's pretty much all I got for you guys. So thank you so much for watching this video and sticking around till the end if you have done so. If you have not done so already, I would like to remind you, please don't forget to just leave a thumbs up on this video, hit that like button for me. Each like left on this video really helps the performance of this video and helps it get pushed out to other people here on YouTube, and I would love it if as many people as possible could see it. Also, guys, I'll kindly ask you once again to leave me a comment below. Let me know what are some of the best performing stocks in your portfolio. I'd love to hear if we have any of the same ones, and I'm sure actually there's some of you who have positions that are far more appreciated than my 20% Starbucks. So let me know in the comments below, what are your best performers? All right, my friends, and with that said, I will now get out of your hair. But thank you guys once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.